Good morning. This is the Elliott Wave Weekly Update for the S&P 500, being recorded on Saturday, August the 2nd at 10:30 a.m. Pacific Daylight Time. I am going to start here on the SPX. Let me just go up to my monthly, just to again show, if this is your first time or you're not remembering what the larger picture is telling us. This is that larger picture, um, which follows through on R.N. Elliott's original works. So I constructed this starting on the Grand Supercycle, which is that blue here, and I started it based on where he was placing Grand Supercycle waves one and two within the Dow. That was the index that he followed, that he wrote about with Elliott Wave Principle, and that's where he started his count. And so based on that, I did the same thing here in the SPX, in the S&P 500. The data that I'm showing you goes back to 1925, 28, sorry, 1928, but likely even before that, but as I can't push it any further to the right or to the left. So grand supercycle waves one and two started, wave one topped in 1929, wave two bottomed in 1932. So within that now, we are in a grand supercycle third wave. Grand supercycle wave three is going to consist of 5 waves of supercycle degree, of which we've only got one and two. So we can say we're in supercycle wave three of grand supercycle wave three. Going on, what's going to be inside that supercycle wave, third wave? 5 waves of cycle degree, of which one and two are complete. And we're within cycle wave three, which is where I believe we're getting close to finishing. So in essence, what we're getting close to finishing is the third of a third of a third. So we're getting ready to finish the cycle third of the supercycle third of the grand supercycle third. So in essence, yes, we're staring in the face of the potential for a fairly large uh, correction. But what would follow is a continued upside, multi-decade bull market. So it is a correction within this bull market, this very long-term bull market, which holds promise to the US surviving everything that's going on. But it's all about the timing, right? So we don't know what and exactly is going to tumble this thing. We've got some ideas. And just so that you understand, I am going to be placing an article that I found on MarketWatch. I'm going to put it in the description for this post. And I really encourage you to read it because it puts a lot of clarity around this whole conversation. Are these tariffs good or bad for the US economy? Is what is happening to our country via the White House and the current administration and their policies that they're putting into place, is it to really improve the US economy, or is it damaging the US economy? Is it setting us back multiple years? This article brings a lot of clarity to really what's happening on the tariff front and on international trade, which has been building in our favor for decades. And now what's happening is it's all kind of trying to be reversed. So I'll put the article in there. Hopefully it's going to work and you'll find the link and you all can read it. Now, back to what we're doing here in this big picture. The market did a sudden reversal. So let's just kind of go through where we are. If we're finishing, getting ready to finish, and we're not there yet, folks, I think we're still within a minute fourth wave, within the ongoing fifth waves up to finish this cycle third wave. So let's just count that down. So we're in cycle wave three, which will consist of 5 waves of primary degree. We have one, two, three, and four on a primary degree complete. The fourth wave completed in 2009. So we're in a primary fifth wave up. What's going to be inside? 5 waves of intermediate degree, of which one, two, three, and four are complete. So we're in intermediate wave five of primary wave five of cycle wave three. Now, let me bring this down to the 5 year. Now, here we have intermediate 3, intermediate 4. Here's intermediate wave 5. What's going to be inside of that? 5 waves of minor degree. 1, 2, 3, and 4. They're done. Minor 4 completed in April of 2025. So we're inside the minor 5th wave to go up and complete this. Now, can we put a timeline on that? Yes and no. What we're finding is our internal waves within this 5th wave are truly extending. The market has been very powerful to the upside as of late. So pretty much from that bottom on April the 7th of 2025, we have basically gone, and you can see it, straight up. In fact, this low was 4,835. The most recent high is 6,427. This is basis the cash market. That's quite a rally, and it's not done yet. So I think what we have finished, and I'm going to bring this down now to the daily chart. I believe what we finished was that minute wave 3, and that happened on Thursday, the 31st, at the end of that monthly expiration cycle. So I think that's like, yes, we could talk about August 1st, that deadline for the tariffs, that all that talk that came out from the president on the tariffs, what's being done, this is being assessed, that's being negotiated, we're putting that one out further, et cetera, et cetera. So, but really, if I take a look at it, a hard look at it, what really took place when we reached that high on Thursday and the market began to sell off? Now, I can go back on the hourly chart and we can go to that. There's the 31st. We started to sell off immediately. Because once it got there, I think that what happened was at that opening, which happened pretty much right at the opening, a lot of things got put into place for the expiration. In other words, it's like gamma got moved, got sold, got purchased, got whatever needed to be done to line it up for the expiration, not only in the SPX, but in a lot of the individual stocks underneath. So then we started to decline. Now, we're coming off in a very clean move down. But now what's being tacked onto all of this is, oh, it's a bloodbath. Oh, it's this. Oh, it's attached to the tariffs. Oh, this and this and that. Because it doesn't always have to be surrounded by the tariffs. No, they're not good for the U.S. They're not good for U.S. trade. Period. End of story. And what's being spun to us as something that's positive for the U.S. economy because we're being taken advantage of is in my view, not accurate. It's not accurate. And so please, if you get a chance, read the article. Hopefully it's going to be there in the description on YouTube. Now, let's get back to this count. I'm going to pull it back out to that daily. So what we got is 1, 2, and this beautiful third. It was picture perfect in terms of Elliott. Now, did it get up to the levels that I was looking for? Not necessarily, although it did go to a new all-time high at 64.27 in the SPX. And while I was looking for a little bit more, possibly up to 6,500, putting a call out like that and getting up to basically 64.30 within 50 to 70 points from the ultimate level, no, I'm not going to argue this. I think that the market performed gloriously, reaching a level and then turning lower in a fourth wave. Now, granted, we need to understand that in a fourth wave under Elliott, it's a sudden turn, it's a sudden move in the opposite direction. And it's going to get pinned to a lot of different things as we're hearing now, right? The big talk, all the tariffs. And how, oh, this bloodbath that's taking place in our markets. It's like, well, there's a couple of ways to think about that. We have seen these stocks go to the moon, just purchase, purchase, purchase. And again, that is snarling and catching a lot of retail jumping into the market. But truly, what it was is options trade and volatility, believe it or not. Volatility being cut and cut and driven lower, driven lower, driven lower. And if you remember, I discussed it, others discussed it. Let's be careful here because what we're really getting up to is a sudden surge higher in volatility, a snap and a pop higher. And that's exactly what we got. Why? Because the market is declining with true speed now. And what we're seeing is just a lot of bailing. Sure, sure, why not? We've had two expirations. We had the monthly expiration, and then on the heels of that, we had the Friday expiration, and that took out a lot of gamma. So because it expired. Now, what does that do? So all of those positions settle out. Either you're going to get cash or you're going to get stock, but it settles out. Money changes hand. So we're likely going to see another pop higher in volatility, a little bit of a slide lower in the market before we begin to bounce and reset, maybe just for the week. So what are we now working towards? August monthly, not the end of the month, August monthly, which is the third Friday in August. We've got that expiration coming up. And then we still have our zero DTE, so we have our dailies, but we also have our weekly expirations. They will continue to be important in terms of direction and what gets played out here. Initially, what we saw was, again, a lot of adjusting going on because of the overbought nature in the market and these options expiring on Friday. And they were at levels, for example, in Apple, they were levels that were 215, 220, 211, etc., which just wasn't going to happen. Apple gave their report. They came in above estimates across the board. Well, what happened to the stock? Time to get out, time to readjust, and to understand, are these tariffs that China's going to have to supposedly pay, which is not actually true, but the tariffs, what actually happens, because we already know that the iPhone, the iPad, the iMac, these products are constructed and made in China and shipped back into the country. But also, what we have to need to understand is that the increased price, yes, some of that is going to be on a tariff basis, but that's because we have to pay for what's being done. But on the other side, all of the technology, all of the intelligence and building this product and advancing this product and all of the things that are included are here in the United States. And that costs as well. Do you think people at Apple are low paid or high paid? So to make the construction to do that at a better price than it can be done here makes sense. That's all about global trade. So it is a two-way street, folks. Trust me, but it's being broken down. Now, let's kind of get back to what was going on. Again, is are the earnings, were they really bad? Why did the stock go down? Well, because the stock was overbought. And it had everything to do with gamma levels. It had everything to do with they need to make an adjustment to the price. It's not that Apple's a bad company. It's not that Apple's going to suffer because of everything that's going on. I believe Apple will survive just perfectly. And we will again line up, hopefully, for the new iPhones, for the new iMacs, for the new iPads. That's all going to continue, as will in other industries. The market for AI chips will continue, even though NVIDIA went from 185 back to 172. Why? It was overbought. And we're going to see some reflection of that as the options expire and gamma disappears, and then we have to make an adjustment to positions. That's really what happens when we go through an expiration cycle. Now, where are we then? I think we just did complete that minute third wave. Let me bring this down to the hourly, and we're going to take a look inside. There it is in all its glory. Then we start to come down. Now, the decision is like we're going to come down in an ABC. So we needed to kind of try to get a grip on, well, is it going to come down in a flat? So that's where in other words, that the A wave is going to be ABC in and of itself, which would then put it into that, as under Elliott, we're looking at corrections. What are the patterns? What are the structures that can happen in a corrective phase? And first one is going to be, it could either be a zigzag, which is a 5-3-5 for the A, the B, and the C. 5 waves down for A, 3 waves up for B, 5 waves down for C. Now, what do we expect inside of that? We would not expect that B wave to turn and go into a flat, which means it goes back up to pretty much the high or possibly even above it and then come back down. Because it's a zigzag, it's 5 waves down, 3 waves up, 5 waves down. We're not looking for a zigzag. So the B wave in this case, in my opinion right now, is likely just going to be a normal, maybe back up to 50% retracement, 62% retracement, possible. But a 786 or a 100% or even an irregular, I'm not going to be looking for that. Now, that doesn't disqualify it and say it's not going to happen. I'm not looking for it. There's a big difference because we do have changes in how Elliott functions with the advancements we're seeing in algorithms, the advancements that we're seeing in trading, and it's all the quantitative trading. All right, so let's dive inside this hourly chart. So what I think we've got going on is of 1, 2, 3, 4, and we still have a wave 5 down to do. Now, let me just add where we think this fourth wave or the fifth wave can come in. I always think I had these on there, but I guess it didn't save it. So we're going to be doing it in that one. Let me just fix this a little bit. And so it's not, it's like I don't think the A wave is done yet. So we're going to take a look at if the fifth wave is going to start to extend, what can we expect? Well, here's what it looks like. The 100% is 6208. Now, again, remember, we do have this here, which is a previous fourth, but within this degree, I believe. Let me go back out. Where did I put? No, I didn't. It's actually, it's here. So, but within the minuet wave 5, it was a fourth wave. So we have 1, 2, 3, and a 4, and then that being the 5. So it was a much smaller 4. So the other thing that I actually did was I revised the internal count, bringing the minuet wave 4 back down to a much lower level, back down to 59.43. So that's the completion point. Because I felt I needed to line this up better with the fibs that were very clean, by the way, showing us that the strength of that third wave would suggest that we come down to this fourth wave, which previously was of a lower degree. It was a part of the third, which was up here. So I readjusted that. And putting the 3 here and the other 3, bringing it back down to its original position, and the 4 here. So we're now, what are we looking for? That initial level got taken out, by the way. So that kind of got taken out. Go back down to that hourly chart. The initial level almost got taken out. This level is 6201. We got down to 6212. But I don't think this internal fifth wave is complete yet. So that would suggest that we have 1, 2, 3, 4. We're going to come down. The first 100%, where wave 5 would be equal to wave 1 at 6208, 6209. But I think we go further. So this is where I think we might come in. 1.618 or in between, but I think we go below that level. I think we dip below 6,200 as this fifth wave goes out. So what can I say about that fifth wave? Kind of looks on the hourly chart, 1, 2. So we start by going back down next week. And Monday for the SPX. We'll get a clue tomorrow on the opening of the ES. So here we have, and then here's 236, 61.13. So we have 61.72. A real stronger push can bring us down to here, 61.13, 14. But we need to kind of finish the five, put a wave A, get that B wave in, and then come back in a C wave. And it will be that C wave that I think can get us down to that 5,900 level. The fourth wave sits at the low sits at 59.43. So I could put a little box right around here, and that would be the fourth wave of one lesser degree. So I can do that. In fact, I will. Just kind of put that up right there and change that color so that we know what it goes with. It goes with this. And that's that fourth wave. And then the 382 is just below it because the fourth wave is at 43. A good push on the way, we're at 5,900. And I know that when we get there, when we start coming in there, don't forget to on a spot gamma basis, 6,000 has been strong support labeled large gamma 1 for the last month or longer. I don't think that's going to change unless a lot of it expired on Friday. I would assume that it's still there. So that will also come into play because we got this whole box, right? Top side of the box is 60.59 with the low side of the box being 6,002, which kind of goes there, right up here. So we might get into the 5,900 handle. I would expect it because the low sits at that mid-range, 59.43. But we have, for a little bit stronger push, we got that stronger support at 59.19. And I think underneath it and above it will also be strong gamma support. So what are we looking for? I'm looking for additional downside to begin. And I think at some point, it may take all week, I don't know, but I think at some point we should start to put in a B wave. Now, I'm not looking, the other thing is, it's like, this is 2 days. This is 2 days. The damage that's been done has took place in 2 days. So when I'm looking at this thing, like, okay, in a time-wise factor, I'd be looking for this minute fourth wave to take a little bit longer. And let me show you why. Because here we have the beginning of it on April the 21st. This was July 31st. So what do we have? May, June, July. It was 3 months in the making. I would suspect that we at least get a month for wave 4. A month for wave 4 to get us back down to this. But 2 days, we're well on the way. So the time factor, because of the type of trading, the algorithmic trading, the quantitative trading that we do, really speeds things up, it seems to be. But again, I've always stated markets go down a lot faster than they go up. And that seems to be proving true right now. 2 days, we've seen the market go from 64, 20, 60. Oh, no, it didn't get there. Had to. 64.27 with that low being 62.14. That's a lot. That's a lot in 2 days for the SPX. So maybe we slow down, maybe we get down there real quick, and then we start to rally. And I think the rally could be just as fast, by the way. I think we just bounce right off of a low. So we might even get a V bottom. I don't know, but I wouldn't count it out. But the market is also going to be very sensitive to all things tariff. That's still going to be in there. Why? Because there are algorithms that scrape all the news sources and they interpret anything tariff related and then put a buy or sell attached to it. That's why we get those very quick reactions. So it's a difference in how things trade. Prior, it was human beings. We had to go look at a tape. We had to go look at the news services to find out what the news was and then react. Not anymore. Okay, so looking for a fifth wave down, completing wave A. So it's going to be minuet wave A of minute wave 4. Then we're going to get a three-wave rally. We will be working our fibs accordingly. Once we get that low for wave A, I will run the fibs from that high down to that expected low, and we'll get wave B. Wave B going to be here important levels 382, 5618. Those are the three levels. But again, it's going to come up in a rally, decline, rally, an A, B, C, up. And I would start to think that it could all there's still going to be with the B wave, we really do have 11 to 13 different variations of what that B wave could look like. This one's turning into more of it's just a five, and that's all you get. You get five. But in terms of a B wave, we get an ABC, we get an ABC X ABC, we get an ABC X ABC, ABC, all kinds. Then we get a triangle, we get all kinds. And so we have to just let it happen and deal with it as best we can. When we get into it, it's going to change the dynamic and how you want to trade. If you're a day trader, there's going to be a lot of sideways. There's a lot of false starts, false, everything. I think we'll still have our periods where we'll be able to get in there and move around and make some money. But I think it changes the dynamic from pretty much straight down and strong little rallies followed by additional decline to more of a sideways type of a move. So that's it for the cash market. Let's go over and take a look at the ES, which of course trades longer hours. And now you can truly see the depth of this decline. Again, same deal. Minute wave 3 coming down to put in minuet wave A. We have 1, 2, 3, 4, looking for an additional fifth wave down. Here's our markers. 62.34, that's the first one, 618. It does put in a slight new low. So maybe it works, maybe it doesn't. I would suggest it doesn't, just because of the nature here. I think we go through that, but I'm leaving it there for right now. And then we have 100% at 61.96. And I actually do need to include 1.618 in this picture at 61.33. So I think ultimately we can get the fifth wave down 61.51, that's 236, 61.33, that works as well. I'm going to go over and take a look at the daily chart where we have, I don't have any price support. We're actually going to go through it because that first price support was at 62.41. And we went through it, came back, closed above it. So it might still be there, along with that 62.35 area right there. And then if we go through it, I would suspect that we're on the continuation side, and we should then get down into these levels down below. Finish up the A wave. Now, whether it stops there or there, this A can come down, so don't be fooled just because I've placed it there. It's just a placeholder, let's say. But I still think we got 1, 2, 3, 4, 5. So I think, yeah, I think we'll probably break that. Maybe not. We'll see. But it's all going to be in the pattern. And there's our markers that go along. Most common for a fifth wave is that is equal to wave 1. That's why that's sitting right there. 61.96. Next up would be 1.618, which is 61.33. All right, moving averages, you see they're all starting to line up on the hourly chart there. You have the 8, the 30, the 78, and the 200. Came down. It's now all pointing down. Even the 200, you can see, is crested and starting to head lower. We pull up and we look at the daily, which is a little bit slower. And still, we don't even have, this is the daily, we don't even have the 8 coming back below the 30. So this basically still in alignment to go up. Talk about dichotomy, talk about what's really going on in the markets. This is the deal. So we need these to kind of follow through, but it kind of gives some credence to it is a fourth wave. So it's not an all-out slaughter as you're hearing. Oh, stocks are down hard, stocks are this and that. Okay, being reflected in my daily 8, the 30's going flat, the 50's going flat, the 200's going flat. That's not a slaughter. That's just a pullback. And these are going flat, which is going to provide support. They will provide support. Now, the 30, we're below it. We closed below it. So I'm looking for that to turn and probably start to gain some steam. But this 50 is going to go flat at around 60.83. So we're not even there yet. To finish a wave A, I think we come in above this. And then go B wave, and it's the C wave that'll take it out. So the greater damage, in my opinion, will happen within wave C. Okay, so that's where I'm going to leave this for now. I thank you for spending time with me this morning and checking this out. Please do check out that article. I will be putting it in the description. It's important. It gives a clean understanding of everything that was built up by all the previous administrations. And we're going back Republican and Democrat. All of them have built trade relationships globally that are being ripped apart and tossed out at the moment. Are tariffs good for the U.S. economy or bad? We all get to decide. All right, our next update will be on Monday morning.